Welcome back to The Explainer. Today, we're tracing the absolute lifeblood of business. We're going to start with a zoomed out look at those massive global financial engines that power the entire economy, before pushing right into the internal corporate dashboards that keep individual companies from, well, running straight off the road. But before we start the engine, okay, let's dive into this. Do you know the exact difference between finance and accounting? They're kind of constantly lumped together in corporate speak, right? But structurally, their functions are entirely distinct. We're going to map out exactly where one ends and the other begins. So here's our roadmap for today. First, we'll cover what finance is, then we'll look at the money market, the capital market, the internal accounting dashboard, and finally, the people behind the numbers. Section 1. What is finance? Fueling the economic engine. Think of finance as the main mechanism for acquiring the fuel a business absolutely needs to survive. It's the art and science of managing money, but it's way more than just a treasury. It involves the whole shebang, the huge ecosystem of institutions, markets, and specific instruments used to transfer funds. Ultimately, it's a highly strategic, forward-looking process focused entirely on valuation, survival, and long-term growth. Now, while it lives in the exact same neighborhood as economics, finance has a completely different job. Economics evaluates the really broad macro allocation of resources, supply, demand, overall consumption. Finance, on the other hand, takes a micro approach. It utilizes highly specific data to make tactical, day-to-day decisions about managing money for individuals, businesses, and governments. Section 2. The money market, short-term fuel stations. This is the external financial system acting as a fast-paced network of short-term fuel stations. So the crucial point is 1 year. That is the strict, absolute maximum original maturity for anything traded in the money market. If a bank or a government needs temporary cash, or maybe they have a surplus they just want to park somewhere safe for a few months, this is their go-to hub. Because of this super compressed timeline, the instruments used here are highly liquid and carry very, very low risk. Take treasury bills, for instance. They're issued by national governments, they are generally default-free, and they mature in just 91 days. You've also got certificates of deposit and call money, which literally guarantee payment on demand to the issuing bank. The whole system is built entirely to maintain the rapid liquidity of the banking world. And this brilliantly illustrates how a whole ecosystem of participants makes this rapid market function. The central bank sits right at the top, managing the nation's liquidity as the ultimate lender of last resort. Then you've got commercial banks, accepting deposits and making advances, merchant banks handling wholesale banking for corporations, and development banks providing targeted credit to specific sectors like agriculture. They all play very distinct, totally interdependent roles. So, the money market is absolutely perfect for keeping the lights on this month. But what happens when a business needs funding for way more than just 1 year? Say to build a giant new factory, or fund research and development for a completely groundbreaking product? Section 3. The capital market, funding the long haul. The contrast here is all about timelines and economic purpose. While the money market is strictly for short-term, highly liquid credit under a year, the capital market is all about long-term financial resources. Its entire purpose is to mobilize savings across the economy to drive real structural growth, capital formation, and major industrial development. Now, the capital market itself actually splits into two main segments. The primary market is where brand new, previously unquoted securities are born, like when a company issues shares to the public for the very first time to raise fresh cash. The secondary market, well, that's what most people picture when they hear stock market. It's simply the trading of second-hand, already existing securities between investors through licensed brokers. When a company actually needs to raise that fresh, long-term cash in the primary market, they have a few different avenues. A public issue brings in massive volume but at a really steep cost. Alternatively, they can completely bypass the public and do a private placing directly with big institutional investors, offer a rights issue exclusively to their existing shareholders, or simply secure term loans that span anywhere from 1 to 10 years. Okay, so say a business successfully navigates these markets. They secure the long-term capital they need. The fuel is officially in the tank. How on earth do they keep track of it all and ensure they don't crash the company? Section 4. The accounting dashboard, measuring the vehicle's health. At its absolute core, accounting is the process of identifying, measuring, and communicating economic information. The entire goal here is to generate informed judgments and decisions for the users of that data. For any profit-seeking business utilizing economic resources, having this reliable dashboard isn't just a helpful little feature. It is literally essential for survival.
Now, what's really interesting about this is how it debunks a massive myth. It's a layman's misconception that bookkeeping and accounting are exactly the same thing. They aren't. Bookkeeping is actually a purely mechanical process. It's just the routine recording of daily economic activities. Accounting is vastly broader. It absolutely relies on bookkeeping, sure, but its true value lies in the analysis, interpretation, and strategic communication of that raw data.
See, this dashboard goes far beyond just keeping basic transaction records. It involves deep data analysis, preparing the actual financial statements, managing funds and tax burdens, and crucially, building the forecasts and budgets that dictate the finance department's next major strategic move. Section 5. The people behind the numbers. Navigating the financial data. Let's move along and see exactly how this builds. Operating this dashboard requires a highly analytical, chronological process. First, observing and identifying events with actual economic value. Second, measuring them strictly in financial terms. Third, recording and classifying those measurements. Fourth, summarizing that absolute mountain of data. Fifth, reporting it via financial statements. And finally, step 6, interpreting the content so leadership can actually take action. Because this process is so incredibly rigorous, the accounting department is divided into highly specialized roles. You have the internal auditor, ensuring strict compliance, the treasurer, managing the daily cash flow, the budgeting officer, mapping out the future, and management and cost accountants providing targeted data to leadership. They require peculiar expertise and professionalism, and they're the specialized crew making absolutely sure the corporate vehicle doesn't veer off a cliff. We have covered some truly incredible ground today, from the short-term money markets fueling our daily liquidity to the capital markets building our industrial future, right down to the specific accounting dashboards keeping individual businesses alive. But I want to leave you with this provocative thought. Where do your own savings sit in this massive financial engine and dashboard right now? Are they providing short-term liquidity, or are they driving long-term capital growth? Understanding these macroeconomic systems reveals exactly how your own personal resources fit into the global puzzle. Thanks so much for joining me on this explainer, and keep learning.